to be on the strong note for startups with 61 deals witnessing $653 million being pumped in. Data exclusively compiled by Venture Intelligence for ET Now shows fintech, consumer brands emerge as the top sectors. Interesting chat coming up only on ET Now. Messaging platform WhatsApp finally gives in, says will comply with RBI norms before a full-fledged launch. This comes after the Supreme Court pulled them for running trial for 1 million users without confirming to the guidelines. And get ready to make the most of online discounts. Amazon kicks off summer sale with up to 80% discount on select categories. We will bring you a lowdown on the deals that you just cannot miss. Hi there and good evening. You're watching Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Ruchi, Bhatia, and as promised, a power-packed show lined up for you. So let's get started. 2019, as we've told you, continues to have a strong footing for startups with 61 deals, witnessing $653 million being pumped in. Data exclusively compiled by Venture Intelligence on your screens there shows how financial technology companies, consumer brands have emerged as the top sectors. In fact, angel investments has peaked to 26 as compared to last month when the deals were about 19. The mega funding this month was largely driven by big fundraise by BlackBuck. Remember, we got you an exclusive chat with BlackBuck yesterday. Ninja Card and Dream11. The top 5 deals of this month also include Mobile Premier League and CleverTap. In fact, the top sectors of the month on your screens there: fintech, consumer brands, educational technology, and artificial intelligence. Also, for more on that, I'm joined by 2 very special guests on the show: Arun Natarajan, the founder of Venture Intelligence, and Srikrishna Ramamoorthy, partner at Unitus Ventures. Arun and Srikrishna, many thanks for speaking to us, taking your time out. Let me first begin with you, Arun. One trend that we have noticed, that is a lot of funding really being driven by large ticket investments, especially in the 50 million plus category. Arun, can you hear me?
Yeah, I can hear you now. So, indeed, the season is clearly one driven by large ticket investments, across the venture spectrum. This month, April, that is, we saw an accelerator program from Sequoia, come in with $1.5 million check for, as many as 17 startups, and out of which 9 are, from India. So, this size inflation in terms of, investments across the venture spectrum is clearly something we are getting to see. And as you rightly said, the 50 million plus, investments have grown as well. Last month we saw Alibaba, collect as much as 150 million. And this month, the largest investments, as you mentioned, went into BlackBuck, again 150. And it's also interesting in terms of the nature of the investors who are writing these big ticket, investments. One, last year was dominated by the strategic Chinese investors, Alibaba, Tencent, and so on. It's interesting to see this year, quite a few US investors, including Tiger Global, Goldman Sachs, Axel USA. The last couple of them are actually investors in, BlackBuck's latest round. All of them come in. So startups are clearly spoiled for choice right now in terms of buckets of investors being available, both from the east and the west, as well as homegrown investors. But yes, very much size is really dominating the headlines as far as the recent months go.
Absolutely, size is dominating the headlines. Even the numbers of the action that we have seen, 19 that we saw in the month of March versus, of course, 21 this time around. Let me, in fact, get Srikrishna on that. Srikrishna, we have seen how there's a very strong action at the beginning of the year 2019. How do you see that trend shaping up? What do you make of the strong action, and what do you really attribute this to?
I think a few things, Ruchi. One, I sense that we are going to see a pickup, and we're going to see this clip continue. It's also likely that some of these numbers do play out because it's the end of the financial year, and you could see some deals getting announced, etc., towards closure. But in general, I see this number really going up, and I see this across stages, both with sort of the early seed/early stage where we at Unitus invest in, but also I think there's a fair bit of follow-on investing activity as well. Fintech, I know, is a sector that's really hot at this point in time. We're seeing a number of investments, but I think BlackBuck raising that recent round is also an indication of activity in the broader logistics and transportation space, which is, I think, also been fairly active. We may not see as many large number of investments, but I think there's a fair bit of capital in that space as well. I think e-commerce, payments, and all of that will continue to see a rise simply because there's well-entrenched players that will necessarily need to continue to raise more money, and just fueled by all of the consumer demand that we're seeing and in India in general. I actually, anticipated that perhaps things may change a little bit with election year. I honestly don't see that playing out, and I think that this will continue.
Right. Unitus, in fact, started investing in fintech companies back in 2018. Do you see this trend continuing? Which segments do you yourself see putting in and pumping in more money?
Sure. Well, I think credit will just continue to see a number of investments. I don't see that changing. We're seeing both existing fintech credit players as well as newer players that are emerging, raising a fairly large chunks of money. I think a lot of that is simply because of the fact that the demand for credit in India, especially consumer credit, I think will just far exceed the supply for at least the next decade or so. So there's a lot of activity. I worry sometimes that that's a little frothy because we haven't seen bust cycles in consumer credit, especially in fintech consumer credit yet. So it could be interesting to see how that plays out, because I think that will then start to impact credit quality and may get to see a situation where fintech lending is tightening. But sectors that we're interested in are much more sort of non-credit really. We like vertical financing or non-consumer credit or non-SME credit, I would say. We like vertical financing. We've closed an investment in a company that's doing loans for education and skills financing. We like platform plays, again, around savings, investing. InsurTech is also hotting up, and we've 2018, I think our investments were really around InsurTech, around vertical financing, and we've also done an investment in an interesting and innovative group savings play as well.
Right. Arun, if I could get you on that, the reason why the financial technology sector has emerged as a top sector, so to say, it seems like that's really the flavor of the season. How do you see that trend shaping up, and any more sectors that you see more investments really come into?
Sure, fintech is clearly flavor of the season. 25% of the investments in just April went into just that sector. So I can understand, Srikrishna saying, the bit of a concern whether it's, overheating. And within that, yes, lending companies, grabbed most of that dollars there. For example, Zest Money attracted as much as $20 million, led by a, specialized fintech-only investor in Kuana Capital, and we saw, companies like Credit, for example, within the same consumer segment. But the encouraging fact is that in fintech, it's also, different segments. For example, we saw Bharat Pay, getting funded strongly, which is in the UPI, kind of payment space. So we are seeing payments, we are seeing B2B fintech, lending, and so on. So it's not just one. So there are, for example, companies like Cred which help you settle, credit card bills, for example, and it's kind of diverse. In the mutual fund space, we see some investments like Srikrishna said, insurance. So it's not too worrying, but over lending and the challenge is getting back the money, and whether these startups, as we see cycles, will succeed is a big question. Outside of fintech, we're clearly seeing investments in the consumer brand space, pick up. We clearly are seeing, edtech, kind of pick up again. And so also, like we mentioned, companies in the artificial intelligence space, very notable transaction, and that is a Matt Street Den, picking up a strong investment, with existing investors, Sequoia, and a new hedge fund investor also coming into the company. So, it's a very good mix of companies across sectors, but yes, at this point at least, fintech is dominating in the overall pie.
Absolutely. Arun, help us get a sense on angel investments. What is happening? It looks like the regulatory pain seems to be over. Is the traction now finally picking up?
Sure, it was really, to hell and back in terms of what happened, towards the end of last year with those notices and so on. And the numbers are indicating a bounce back. But in terms of, which pockets the bounce back is happening, even within the angel spectrum is interesting to see. So, for example, you are seeing some of those ultra HNIs and the angel networks come back to their old pace of investments with most of the uncertainty out of the way. But, you are not seeing so many of these, companies who are, individuals who are investing, friends and family like, or what were called tourist angels. They don't seem to have come back, and that the regulation still is a bit open to interpretation, and hence people seem to be staying away. But for the institutionalized investors tending towards becoming more institutionalized, including there is talk of accrediting investors for allowing the 25 crore limit and so on. These are encouraging signs, and there is numbers are reflecting bounce back in terms of at least to the levels of 2016, kind of thing, rather than, the heydays where, we had a lot of these tourist angels. They seem to have, taken to a pause right now.
Right. Srikrishna, if you can come in on the early stage itself, what has changed over the last year? We are seeing strong follow-on deals. Has that been at the cost of early stage, and is this still growing at a healthy pace?
I think it is. I wouldn't. We've not seen much of a change really in terms of things getting additional levels of funding at follow-on stages, really resulting in that much of a change at early stage. I think we continue to see a very good quality of. I think we've seen entrepreneur quality, keep getting better and better, and I think that's ultimately what's leading to just more venture investable startups. I'd say that both in terms of the pipeline that we see, as well as in terms of the number of investments that we've been doing last year, it's similar to the stages or similar to what we've been seeing, let's say, even 2 years ago. It's clearly very different from what it was in 15 and 16. I think that buzz, as well as the craziness of those few years is really not there. I think it's far more real now, and we continue to see just more real ideas getting funded, and I think there is a higher level of I'd say there is a higher level of angel activity. We're seeing interesting opportunities in what's being now termed as sort of the pre-series A levels, where folks have raised some bit of angel money, perhaps even some amount of maybe even $1 million or so of friends and family, maybe even a seed investor, but still a lot more to be done before they could be raising growth capital. So that's actually a gap that is starting to emerge, and we're seeing a number of investors, including ourselves, actually play in that space as well. And I would still bucket all of that as early.
Arun, if I... Absolutely. Arun, you were talking about the B2B segment emerging as a hot pick as well. We have seen how Tiger Global backed multiple companies in this space recently. Is there enthusiasm here to stay?
Sure, the second largest investment in April is a single $90 million check that Tiger Global wrote for Ninja Card, which is more in the agri-tech space, but broadly characterized as B2B as well. And this follows Tiger's investment in companies like Facilio, File, and so on. So it's been a string of B2B, and Tiger in its return back to India without the Leaf Excel leading them clearly seemed to have a bias towards B2B so far. And it remains to be seen whether they kind of continue to focus in B2B. But broadly speaking, B2B has tended to kind of do better in terms of attracting investments when there's a little bit of over-investing already happened in e-commerce or other B2C segments. So investors tend to look at B2B. That's what we observed in the past. But if you just take the latest month, for example, it's a good balance. We are seeing the top two investments, like we discussed, were B2B, but the other two were the very B2C as it gets. Dream 11, Mobile Premier League. And as VCs tend to say, India, the big play is really the consumer play, and that's where the big returns are going to come from. While B2B is great in terms of hedging and the natural advantages of SaaS and so on, coming up. But it's not going to take away much from B2C in terms of the sheer ticket sizes. B2B is definitely there, quite strong right now, but these are not your big ticket of the, let's say, the unicorn variety.
All right, on that note, Arun as well as Srikrishna, many thanks for taking your time out and speaking to us. All right, let's shift focus then. The Supreme Court